All right, we're going to break down one of the most important numbers in the entire U.S. economy. And believe it or not, it has a surprisingly huge impact on the world of crypto. Let's get right into it. So, have you ever heard of the Core PCE Price Index? I know, it sounds super technical, right? But think of it like a secret signal the economy sends out. It doesn't just tell us about prices, it can actually give us a major clue about where assets like Bitcoin and Ethereum might be heading. And today, we're going to decode that signal together.
So what exactly is this number? Why does it have so much influence? Let's break it all down.
At its heart, the Core PCE Price Index is just a way to measure inflation. It's trying to answer a pretty simple question. How much more expensive are everyday things getting? It's like a giant price tag check for the whole country.
And that little word core, that's super important. It means they take food and energy prices out of the equation. Why would they do that? Well, think about it. Gas prices can shoot up or crash down because of something happening halfway across the world. By removing those wild swings, economists get a much cleaner, more stable picture of the real inflation trend.
And here is the absolute kicker. This isn't just some random economic report. The Core PCE is famous for being the U.S. Federal Reserve's favorite number. It's their go-to metric. When the Fed needs to make those huge decisions that affect everyone's wallet, this is the number they're staring at the most. Okay, so we know what it is, but why does one number matter so much? Well, because this single report acts like a giant switch, a switch that controls the flow of money, of liquidity, into the entire market.
Think of it like this. If the Core PCE report comes in high, it's like an engine overheating with inflation. The Fed has to hit the brakes, and they do that by raising interest rates. Suddenly, borrowing money gets more expensive, and things get tight. But if that report is low, the Fed can hit the gas, making credit cheaper and basically flooding the system with cash. That cash is what we call liquidity.
And you can see that effect pretty clearly right here. A high PCE report, the money supply shrinks. A low PCE report, the taps are opened wide. And this whole idea of liquidity, basically how much cash is available for people to invest, is absolutely crucial for what happens next.
So we've got an economic report that flips a switch on how much money is flowing around. How on earth does this connect to crypto? This is where that economic signal gets picked up by a totally different kind of market. For assets like Bitcoin and Ethereum, which are, let's be honest, often seen as being on the riskier side of things, this flow of cash is absolutely everything. When money is cheap and easy to get, investors feel a lot braver. They're more willing to take a chance on something with a higher potential return. But when that cash dries up, they tend to run for safer ground.
So you can see how this plays out. A high Core PCE report comes in, liquidity gets tight, and investors start getting nervous. They become risk-averse. That can lead them to sell off assets like crypto, which pushes prices down. But a low PCE report does the exact opposite. It boosts confidence, there is more cash floating around, and investors are more likely to buy in, which can boost prices up. It's a really clear feedback loop.
So let's just walk through that whole chain reaction one more time. Step 1, the Core PCE report comes out. Step 2, the Fed sees it and adjusts interest rates. Step 3, that changes how much liquidity is in the market. And finally, Step 4, the crypto market reacts to that change. It's a direct cascade of events, from a government spreadsheet right down to the price of crypto. So the real takeaway here is pretty simple. The next time you see a headline about the Core PCE report, don't just write it off as some boring economic news. Remember this chain reaction. It's a powerful signal, a clue, that's not just about inflation, but about where the crypto market could be going next.
So now you have the tools to decode this signal for yourself. The next time the data comes out, you'll be a step ahead, looking right past the headlines to the real forces moving the market. The only question left is, what will the next report tell you?